Good morning. For Traders Exclusive, this is George Tkaczuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Well, I'd like to talk about the equity markets, and the equity market's getting a boost this morning due to a trade deal between the U.S. and Canada. So the markets continue higher. They're pretty much near their highs. If we look at the NASDAQ, the S&P 500, and the Dow, and the Dow Transport's a little bit off. Now, as the market continues, leaders are acting well, meaning Amazon's above that 2,000 level. We've talked about that many times. Netflix is above its high volume close of about 379.50. Nvidia's hitting new highs. Apple's up another few bucks today, so Microsoft is doing very well. So a lot of leading stocks are performing well. However, at the same time, we're seeing a little bit of rotation into the medical sector. So what I want to talk about is two stocks. We're going to call them bottom fishing plays. Now, for full disclosure, I do have positions in these. We have been accumulating them over the last few days. However, this is not a trade recommendation. You should always consult your financial advisor. So the first stock is Bausch Health Sciences. Bausch Health Sciences is the old Valiant Pharmaceutics. Basically, it peaked a few years ago at about $260 and crashed down to $8 at about June of 2017. Ever since then, it's been, getting accumulated, trying to break out, making a few strides, kind of making what we call base on base patterns, and a lot of them kept failing. However, at this point, it seems like it might be ready to go. It's above its 12-month exponential moving average. That's the first sign we look at for some that we want to try to pick off bottoms. It's held all its high volume closes, meaning whether those were up days or down days, it's above those levels, so it might be ready to go. Now, it's we started picking it up at about $23, $24, continuing on here. It's trading near about $27. You might want to wait for a pullback to a 10 or 20-day moving average, or maybe $1 or $2 lower. And then if the trade fails below 23, maybe the trade's not going to work. However, here's a case. If you look at a chart, a stock that's formed about 3 bases, trying to move higher. They're still making lots of money. It was just a big kind of, you can say, accounting scandal, but it's moving higher. Similar to the stock Gilead Sciences, symbol is GILD. Also bottomed in June of 2017, continues to make attempts at breaking out, but continues failing. Last week it went through a double bottom base. The buy point was about $76.59. It's trading at above $77, close to $78 actually this morning. So you might want to take a stab at that. Again, not a trade recommendation, just take a look at that stock. And of course, if it doesn't hold that buy point about $76.59, it may not work. So the whole point of all this is there is some market rotation into the medical sector. These might be value plays. Both these companies are making money. It's when some of the other tech stocks may get a little tired, you might want to take a look at a little value play in this market. And if it works, great. But as I say, let price and volume be your guide. If you hit your stops, that's fine too. This is George Tkaczuk for RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.